Good morning, traders. This is Christopher Terry with the opening play video for Wednesday, December 17th. Okay, we're looking at the S&P E-mini futures, and what we see here is an XABCD pattern, and the D pattern has hit resistance, and the market has put a lower high and has been breaking to the downside. As you can see, the market is well below the B point, and that's highly negative. What's going to happen now is we're going to look at the B point, this whole area, which also, if you look at it, is a prior day's high. Okay, look at it right there. That's a key area of resistance for the market. So what we have going forward is any retracement up, we're looking for resistance for the market to sell. What we're going to look at now is any push down going forward will set up a buying opportunity, and we're going to get into that in the other charts. But let's just define a couple of other areas. So we have this right here, as you see. That's a swing high, a bunch of little swing highs, low of this range, and you got the high of this range. So if we were to take this rectangle and we take it from here to here, right across, we can see an established range that potentially can fill out going forward. All right, so any push down below yesterday's low will set up a nice area to buy the market. So let's take this to a lower time frame, if we may. Okay, let's take this to an hourly, and it's going to ask me to fix all this data. Not a problem. Let's go back a couple of 100 days. All right. All right, as we could see, the market high was up in this area, and since then it's been establishing this downtrending mode. All right, as you see, we have this going to establish. I'm going to use chart and drawing mode, and we're going to say chart maker. So let's just put a dot. All right, so we have a high, we have a low, lower high, lower low, lower high, lower low, lower high, lower low, test, lower low. So we see that we're in a series of downtrending bars, and we hit that area on that higher time frame of resistance, of support, I mean. And right here, the market's starting to find some support, put a little double bottom, and now it's trying to edge its way up. What I'm looking at now is the potential. Let me just get this off here for a second. The potential for this market to start correcting back up into this zone. We could probably most likely draw a couple of trend lines here. Let's take a look at that. Got a little trend line here. As you see, we got a little downtrending type of market. And here we have the same type of thing. It's a channel. So what this is telling us potentially is that we can get an ABC type of corrective wave up towards the upper end of this channel, which is going to be lower than this whole area. So let's take a look at this zone. Right, we have some data in here, right? A bunch of little data in here. Little swing low in this area, swing high. So got a whole bunch of data for the market to test back to. So any pushes back up, we're going to set up resistance between 1989, 1995 zone, and then probably down again. But for now, any pushes down, we have this whole area of support to watch against. All right, still think that possibly even if they test down, we're going to set up a buy in the morning session. Any rally, early rally, will set up a short scalp, and we're going to look for a dip down, a higher low, and then up again. It's going to set up more of a harmonic type of pattern is what we would eventually look for, where the market did something like this. Okay, like something like a Gartley or some funky type of pattern like that, but I'm not the best drawer in the world either. So swing low, and then that corrective wave up will set up a definite pattern for a shorting opportunity. The market's in overall bearish mode, and we just have to respect that. So let's take a look at some other markets. So let's take a look at the NZD/USD. So let's just draw in some stuff that we're looking at, and we'll take us home. We're going to look at this tonight. Fibonacci retracements. We're going to take it from the low to the high. We see that the first retracement down was at 50%. What that means is that from this swing here, any pushes down to the zone will set up a bat pattern. Okay, so it's seated a little bit. It could be more of a Gartley, a bat, right in the same zone. So let's just clean that chart up a little bit here. Clean this up. All right, and we'll just leave all this. Actually, just leave that there. And we're going to put these right here. Okay, what we're looking at now is this swing down, where potentially the market can go on the hourly chart of the NZD/USD. We're also going to take some Fibonacci retracements from swing low, swing high, and we're going to do an extension. Okay, now we're going to start looking at where key areas to look at. So you got it 162, and if we were to take this and we were to include, let's just say a 141 extension, most likely it'll tie in right into the zone. A lot of times you want to take a look at swings, see how they match. Here's another one that I'd like to look at. Take this swing low up to the swing high. But then let's clean it up. Let's just get rid of all the data. And this is how I do my charting. It's a way for you to get a little bit of education. Okay. So I take this. Oops. I take this and I swing it just like this. And we see that it's coming in at the 113. We also know that potentially is down a lot lower. So what we're going to do is we're going to throw in some extensions into there. Take another look at this. So we see the 1272 extension, and we can look at the 141 on this particular chart. All right, let's change the colors so they don't match up with the other ones. Do some salmon. What do you think? Some salmon. Salmonella. I'll do a dot and a dot. This is how I lay out all my patterns. So I'm defining the zone to watch. I'm not concerned about time at this point. I'm concerned about the pattern itself and where support and resistance can come in. So swing low to swing high, down. That establishes that first spot, which is at 50 to 618. So we can either look for a Gartley or a bat pattern. So we're going to stretch it all the way down and give us that bat pattern effect. Let's throw some numbers in there. X, A, B, C, D. You know, we have these auto traders, auto bots, and quite honestly, I love doing my own charting because you can establish it yourself. You get a feel for the market. Now, the next thing is, do I care if it gets down here or not? No, I'm just going to wait. Do I care if the market stops here or go up? I'm just going to wait. You want to wait till the market hits a zone, and when it gets there, then you concern yourself. So if we were to map out how this is going to play out, all right, you're going to look at this first drive down. Okay, let's just say it tries up again. Okay, and then down again. So I would expect this to come in as a more ABC wave to the downside. All right, and that's how I would expect it to play. Similar to this right here, if you look here, this, same thing. All right, expect that to do that again. So if the market stops and goes up, don't think, well, the play is over. You want to stay in touch with it and watch to see if it can come down. So I thought I'd throw a little education in there. And looking at the higher time frame, let me just pull that up real quick. So let's eliminate the noise. Let's get rid of the strings. Bang. And let's take a look at a much higher time frame. And then you'll see why I'm looking at that. Geez. That's that weekly chart. So number one, we see all the different support here, right? We see all that. That's established itself. Right in here. Big key area. So if we just take a look at our harmonic type of work, we can see here this is one way to look at it. Okay. Right, so big deep pattern that came out of this, big crabbish type of pattern right down into the zone. So we're now drilling it down to that hourly chart to see if the market can find support. Other than that, let's have ourselves an awesome trading day. And I see my traders in the chat room in the